This is our Forex blog for November 21st, 2011. And like we do most days, we really want to buy the absolute strongest currencies versus the weakest, and we want to sell the weakest versus the strong. The euro is always on top of all the other main currencies, and the yen's always on bottom. So if the euro was strong and the yen was weak, we'd buy the euro-yen. If the euro was weak and the yen was strong, we'd sell the euro-yen. Today, the Australian and New Zealand were the weakest, so it's very clear that you want to sell these two currencies against the strongest ones, the yen and the dollar. So let's look at the Australian yen. Here we have the currency that's underneath the hourly moving average right here. And whenever that is the case, typically the market is more likely to go down than up. Most of the time when the market hits the hourly moving average from below, it finds some resistance. Now, as it hit this, I'm sorry, I'm scroll back on a previous day. Here we go, here's today's. Let me start over. The Australian yen, you can see, is underneath the hourly moving average. It's going sideways here with a very sideways narrow range consolidation. It's underneath the previous day's low, which would be Friday's. And you can see it just can't get and stay above that previous day's low. So, you know, starting today, you might have sold right here and got stopped out with a small loss or break even. When it broke down the second time right here at 54, you can see it came down to our lower containment bands and my Fibonacci profit target level. That's a beautiful 50-55 pip win. And I prefer, after a market's made a move, for it to get a 15 to 25, 30 pip pullback and then sell it again. But in this case, it didn't pull back enough to sell it, but it did go sideways. This is one of our two entry methods. The first one's a pullback, which you have a nice example of this. After a down move, you got to pull back up. You go short, it continues down. This is an example of our sideways rectangle consolidation pattern. Minimum of 30 minutes. I prefer, hour and a half to 2 hours. The market's really weak. It's finding support at my Fibonacci profit target level that I do each night. And then when it breaks down, you go short. And the farther down it goes, and especially when it's underneath these lower bands, at and underneath the lower containment bands, the Fibonacci profit targets are usually the end of the move. So if you had sold this right here at 09, you probably want to get out of half your trade somewhere down here. You only made about 20 pips on that one. And again, waiting for either a sideways, half an hour to 2 hours consolidation, or preferably a pullback trade. It's much higher probability. You go short again, and you can see when you draw your fibs on here, the Fibonacci profit target level is an excellent place to get out. That's about a 35 pip win there. So by using the currency meter and focusing on the Australian yen, selling it, New Zealand yen, selling it, here's, let's scroll forward so we look at the right day on this. You can see this did the same thing today. It went sideways right underneath the previous week's low, the previous day's low. You might have gone short right here and got stopped out with a small 10 pip loss. You went short again, and you can see you made 10, 20, 30, 40 pips. And if you use our trailing stop, it's a pretty decent place to get out. Wait for 15 to 25 pip pullback. Right here is 52. That'd be at least 65. If you got short right here with your stop a few pips up there, you had to sit through a half an hour or an hour sideways move, and then guess where it went? Draw your fibs on this. The Fibonacci profit target's down there. My Fibonacci profit target I drew last night as the likely or possible low today in the New Zealand yen found support. And notice when markets are weak, you see extreme weakness. As they make lower lows and does not have that intensity of weakness, you want to get out of your trade. But nonetheless, there's a lot of good trades in the New Zealand yen and Australian yen. Now, the dollar is also strong today for the most part. So Australian dollar, New Zealand dollar were also high probability shorts. Let me get this thing out of the way here. I'm not sure why this, I was probably resizing this for my website I was working on. Again, this one is underneath the hourly, so it's more likely to go down. If you had sold right here, you probably had a loss. The second trade worked. Notice Fibonacci profit target levels, again, major support. Good place to get out of your trade. And again, this one fell pretty much all day. The Australian and New Zealand were the weakest ones. Here is the Australian dollar, or New Zealand dollar. This one came up to the hourly and found resistance. And when it broke the previous week's low, previous day's low, you got a beautiful, 60 pip move down. All right, so after a big move down underneath the lower containment band, again, wait for at least a 15 to 25 pip pullback. Here it's 83. That'll be somewhere up here around the whole number here. So you might have got into a trade here, lost the second trade, you can see fell about 50 pips. You draw your fibs on that first wave, and look where the market went, right to the Fibonacci profit target. Fibonacci profit targets underneath lower containment bands, very, very high probability maximum move. So, most of the time you want to get out of half your trade at the fib target and let your trailing stop get out of the other half. When there's very little odds of it continuing lower, especially you can see as it fell, it had incredible weakness, and then all of a sudden there's not that much weakness anymore. Good place to get out of the trade there. All right, so those are the best trades today, but let's look at some of the other ones. The CAD was pretty much weak from 3 o'clock onward. It had a slight uptrend in the monthly trend. The weekly trend's down. I focus mainly on the weekly. So again, you could have bought the strong dollar versus the CAD, and notice we're just straight up all day. It's above the hourly, so it's more likely to go up. And once it gets to the upper containment bands, usually you're going to get some kind of a pullback, which you did. I like, again, 15 to 25 pip pullback, so that would be buying it at 1.0350 or lower. Here's 50 right here. If you had bought this pullback right here, you might have got stopped out. You got to get back in again. You can see it went from 51 all the way up to 22. It went up 70 pips. Strong dollar, weak CAD. Now let's look at the CAD yen. Weak CAD, strong yen. This thing's is very likely to fall. You have two narrow range patterns right here. Very, very narrow range pattern right here. That means it moved less during this 4-hour previous period than it did over the previous 7 4-hour periods. So, very, very low volatility breakouts in the direction of the trend, which is clearly down. Daily, weekly, monthly trends down. It's underneath the hourly, and you can see it fell pretty much 60 pips for the rest of the day.